Let's get into the economic collapse financial news. Now, we've been talking about Home Capital Group, and we can see that people are just taking out their deposits like crazy because they're very, very nervous about what is happening right now. And Home Capital Group, well, the situation is getting worse. Depositors now, they have withdrawn 94% of the funds in the past 6 weeks. Now, we need to remember that they had about like $2 billion or so going back to March. Now they have 125 million. People are going to continually try to get out as much as they possibly can. This company right here is going down the tubes. And this is just the beginning. Do you think this is the only company that's having a problem like this? I mean, think about 2007 going into 2008, going into 2009. Was it just Bear Stearns? No. This is going to be a domino effect. It's going to hit many more companies. Think about when this housing bubble completely pops. It's going to be a complete disaster. Because remember, the whole housing market was pumped up into a gigantic housing bubble. Remember how they did it? Investment companies, hedge funds, they purchased thousands and thousands of houses. They held on to them. They bought them very inexpensive right after 2008 crisis. They held on to them and they created this bubble because they were instructed from the Fed. The whole plan was to create the bubble, hold on to all these houses, buy them very inexpensive, sell them off later on. This is how bubbles work. And this is exactly what they're doing right now. Banks were told to hold on to the foreclosures. Do not put them on the market. Why? Because less houses on the market drives the prices up. And they needed to do this in certain cities. They couldn't do it through the whole country. This is why the whole country didn't really perform like these 20 cities. And now we're starting to see it all break down. But people are still out there. And according to you, Mitch, they're still confident about what is happening. Even though there's reports coming out saying that retail stores, and just in the beginning of this year, 3,500 stores are going to be closing, projecting it out to the end of this year. We're going to have about 8,000 plus stores closing, 50 bankruptcies. The housing market, and I've been looking around all over the place, houses are on the market longer and longer and longer. And when people were asked the question, what do you think about homes and home buying? All of them are saying, are out there right now saying, this is a great time to sell a home. Yes, this is how it works. When the bubble is at the height, at the point where it can't go any higher, people believe, and this is done on purpose, that this is the time to sell the home and then purchase another home. And what they find out is that no one's coming around anymore, because by the time they start to sell, by the time they go out and they start doing things, we're heading down the other way. Traffic dries up, and this is exactly what we're seeing. Now, retail sales, just like we expected, well, they came in pretty darn bad. Retail sales miss across the board. Now, remember, we've been living in this illusion. What do I mean by illusion? Numbers are manipulated. At this point in time, everyone realizes that unemployment is manipulated. We discussed this many, many times before. We talked about retail sales. Now, when we look at the retail sales numbers, and we discussed how retail sales work, they're coming up with retail sales, they're up by 0.4%. They missed the expectations by 0.6%. Now, we know that all these stores are closing. I mean, I go to the mall, I can see like Payless, going out of business and things like that. We know the Sports Authority closed down. Remember how they work with the stores that are closing. Once the stores close, they don't just say, okay, we're done with the sales with this store. They project it out for many months into the year, so it doesn't hit the economy that bad, even though in reality, that store is not selling anymore. So when we look at these numbers, are they really true, or is it a lot worse than what they are saying? We know it's a lot worse. I mean, think about it. 3,500 stores. We're going to hit 50 bankruptcies. J.C. Penney, Macy's, they're all saying that they have to close many more stores, which means more people are being laid off. We have been kept in an illusion, and the illusion is still here, but it's breaking apart. People are starting to realize, well, wait a minute, I'm going to the store. That's closed. This is closed. The anchor store is gone. What's going on here? How is this a recovery? Aren't we supposed to be expanding? And then, of course, the corporate media, well, it's all going to online sales. Yeah, that's 8.63% of total retail sales. I don't care if it goes up 30%. It's only 30% of the 8%. Who cares? But when we look at this, we can see what's up and what's down. Furniture and home furnishing stores, down negative 0.5%. Grocery stores, food and beverage stores, down negative 0.3%, down negative 0.4%. Clothing and clothing accessories, down negative 0.5%. General merchandising stores, down negative 0.5%. And when we look at this, we can see that we're seeing a lot of negative numbers. Now, even the numbers that are positive, like motor vehicle, 0.7%, electronics, which are 1.3%, you have to remember, they're still counting those stores. Even though they're out of business, even though a lot of stores have closed already, they didn't just cut them off. So we know these numbers are completely fake, phony, and false. Now, the Trump administration, Washington, and Beijing, they came up with a trade deal on beef, poultry, and gas. And many people are saying, yeah, who cares? They came up with a deal where the United States is going to be supplying China with U.S. beef for the first time since 2003. In return, the United States will welcome Chinese exports of cooked poultry. And I'm not too crazy about cooked poultry from China. Actually, I'm not that crazy about the food here in the United States either. A lot of GMO, a lot of chemicals in the foods, but that's for a whole different discussion. We also see that they agreed to begin exporting U.S. liquefied natural gas to China. And Beijing will also permit foreign financial services companies to provide credit rating services in China. Now, this is very important because we need to go back a little bit in time here to one of the reports that I did that I said that the United States is preparing for after the collapse. This is part of it, where we need to establish trade. And something very, very important came out of this. And of course, the corporate media, they didn't pick up on it. They're too busy, oh, that's right, with the nonsense of Comey. And Trump is keeping them very, very busy with that. The Department of Commerce said that Washington had also agreed to recognize the important, now get this, China's Belt and Road Initiative, the Silk Road trading routes between the East and the West. Remember what I talked about, where the Trump administration behind the scenes, behind plan, the secret plan, behind the plan, this is why China was dealing with North Korea, this is why Duterte was involved. This is about joining Silk Road. This is about having trade when the system comes down. And here we have it right now. So we can see that things are being put into place. Now, we know that this economy is actually getting worse and worse as time goes on. And we know that one of the tools that Trump has, and people are writing in all different tools that he has, well, he needs to blow the bubbles up. He needs to keep everything going the way it is, but actually accelerate the process. So Steve Mnuchin, most likely he'll be removed also, like McMaster's, Mnuchin. All these people were put in place for a particular reason. And later on, he will get rid of these individuals. Now, Steve Mnuchin, he's going to be reviewing the Volcker Rule, which is seen as restraining liquidity in the financial market and hampering business investment. The rule prohibits bank capital use for risky trading activities in order to protect bank customers and their money. Now remember, lifting the restrictions would allow for intensified trading activity on Wall Street. Yes, Mnuchin, Goldman Sachs, yes, he's part of the whole banking system. And this will allow banks to improve their balance sheets amid the current cooling in the consumer credit segment. Now, deregulating the commercial lender trading activity would also render the U.S. financial system riskier and make it more volatile for the depositors. And we know that some banks could face capitalization challenges as a result. He wants this to happen. Trump wants this. And everyone goes, well, what about my funds in the bank? Oh my God, the deposits are going to be at risk at this point in time. Well, remember, you're not going to have the currency in the bank. Trump already knows this. He doesn't care about this. He wants them to do all of this. He wants the system to come down. And we can see right now that the Volcker rule prevents big banks, which work with the FDIC, from making large-scale trade transactions, which might entail significant losses and breach their capitalization. This is what he wants. This is all part of the plan. We know that the Fed, they're looking to raise the interest rates. And we can see Fed Evans right now. He's out there saying that, yes, we're going to be raising the rates. He actually said, I think the U.S. economy has sound fundamentals right now, so it's difficult to come up with many downside risks that we see right now. And he also said, I think the global environment is much more sound now than it's ever been. I mean, how ridiculous is this? This is really unbelievable, but they're playing it up because their mission is to bring down the system right now, but to blame it on someone else. Trump's mission right now is to blow up the bubbles, let the bankers do what they do best, and bring down the system. He needs it accelerated at this point. Now, the last act of a central bank is to pillage the entire population and leave them poor, leave them in a state where they can't operate, just like in 2008. Where people were living in caves under bridges, living in their homes with no electric. So the International Monetary Fund, they are ready to raise taxes to support the debt. Now, we talked about this before, and this was just a suggestion at that time. During this period of time, they thought they were going to have a carbon tax, where they were going to use the carbon tax, where, of course, under the illusion that this carbon tax was going to be helping the environment. No, it was going to be paying down the debt. That's what it was really going to be used for. So instead of the carbon tax, because that's going nowhere right now, they said, okay, remember when we talked about the 10% tax on all money in the banks, all the deposits in the banks throughout Europe? Well, we need to do that now. And what they want to do is exactly what Italy has done years ago. Italy simply imposed a tax on money in one's account. This was called a capital levy. This was a one-time charge as an exceptional measure to restore the sustainability of the debt. The IMF right now is suggesting that measure be invoked to help the coming sovereign debt crisis. They've already calculated how much the measure would cost every Eurozone citizen. The amount of the tax would have to bring the European sovereign debt back to the pre-crisis level before 2008. So right now they're looking at a 10% tax on those people's bank accounts. And they want to do this as quickly as possible. What we're seeing is the end game here, people. We already have JP Morgan Chase out there saying, listen, we're going to have a drain on deposits come the end of this year. The IMF is looking to put a 10% tax. They're not waiting. They're not suggesting this. They're already putting this plan in motion. They've already calculated how much each person's going to give. They already know how much everyone has in their account. They already know what the banks need to do. Because all they're going to do is siphon it out of the banks. Click of a button, boom, it's gone. 10%. So we can see that the central banks right now, the end game is to siphon off as much as they possibly can. To take as much as they possibly can. And this is what they're doing right now. This is what always happens when the system comes down. Because they're hoping to bring the system down. Thinking about it, they can siphon all this all this money out of the accounts. They can bring down their debt, crash the economy, basically take as much as they possibly can, the wealth of all these countries, and blame it on someone else, bring the economy back up. They just lowered their debt. People have less money. People are bankrupt. People, can't do anything right now. And this is how they're going to go forward. This is their crash scenario, where they're going to crash the system and keep their system running longer and longer and never let you out of what is happening right now. And it will get worse and worse for more and more people. Where we have the other type of crash, where we get rid of the system. We get rid of the deep state. We cut off the funding. We get rid of the central bank. And this is the battle that's going on right now. So no matter what, we're going to have a crash. It just depends on who's going to do the crash. And what this means is everyone needs to be ready. Everyone needs to be prepared. Everyone needs to have everything ready to go, no matter how this turns out. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared.